What's up? Welcome to our video on why dividends keep growing in recession. We are going to discuss why companies continue to pay dividends during tough economic times and what investment strategies we can follow during a recession. But first, what are dividends? Dividends are payments made by companies to their shareholders, usually in the form of cash but sometimes in the form of additional shares or other forms of assets. Dividends are typically paid out of a company's profits and are a way for companies to distribute their earnings to their shareholders. Why do companies pay dividends? Companies pay dividends for several reasons. One of the main reasons is to attract and retain investors. By paying dividends, companies can demonstrate to investors that they are financially stable and have a long-term commitment to their shareholders. Dividends can also provide a steady stream of income for investors, which can be especially important for retirees and other investors who rely on their investments for income. Why do dividends keep growing during recession? Many investors assume that companies will stop paying dividends during a recession. However, history shows that many companies not only continue to pay dividends during a recession but also increase their dividends. Why do companies continue to increase their dividends during a recession? There are several reasons. Dividends are a sign of financial stability. Companies that continue to pay dividends during a recession demonstrate to investors that they have the financial stability to weather tough economic times. Companies that maintain or increase their dividends are seen as more stable than companies that cut or eliminate their dividends. Dividends can attract new investors. During a recession, investors are often looking for safe and stable investments. Companies that continue to pay dividends can attract new investors who are looking for reliable sources of income. Dividends can help support a company's stock price. During a recession, many investors sell their stocks, which can cause stock prices to drop. However, companies that continue to pay dividends can help support their stock price by providing a steady stream of income for investors. Examples of companies that increased their dividends during recession. Procter & Gamble. During the 2008 to 2009 recession, Procter & Gamble increased its dividend by 10%. This increase demonstrated to investors that the company was financially stable and committed to its shareholders. Johnson & Johnson. During the 2001 recession, Johnson & Johnson increased its dividend by 18%. This increase helped support the company's stock price and attracted new investors. Look for companies with a strong financial position. One of the first things investors should look for when investing in stocks during a recession is a strong financial position. This includes a healthy balance sheet, low debt levels, and consistent earnings growth. Companies with a strong financial position are more likely to survive and even thrive during a recession, making them a more reliable investment option. For example, during the 2008 financial crisis, Berkshire Hathaway, led by legendary investor Warren Buffett, invested in several companies with strong financial positions. One of these companies was Goldman Sachs, which had a strong balance sheet and was trading at a discount due to the overall market downturn. By investing in companies with strong financial positions, Berkshire Hathaway was able to minimize its risk and generate strong returns during the recession. Look for companies with a competitive advantage. Another important factor to consider when investing during a recession is a company's competitive advantage. A competitive advantage is something that sets a company apart from its competitors and allows it to maintain its market share and profitability over the long term. Companies with a competitive advantage are more likely to weather a recession because they can maintain their pricing power and customer loyalty even during tough economic times. For example, during the 2008 recession, Coca-Cola, a company with a strong brand and competitive advantage, continued to generate strong profits and pay dividends to its shareholders. Consider dividend-paying stocks. As we mentioned earlier, companies that pay dividends during a recession can be a reliable source of income for investors. However, not all dividend-paying stocks are created equal. When investing in dividend-paying stocks during a recession, investors should look for companies with a long history of increasing their dividends. These companies demonstrate financial stability and a long-term commitment to their shareholders. Some examples of companies with a long history of increasing dividends include Johnson & Johnson, Coca-Cola, and ExxonMobil. Focus on defensive sectors. During a recession, certain sectors tend to perform better than others. These are known as defensive sectors and include healthcare, consumer staples, and utilities. Defensive sectors tend to be less cyclical and more stable than other sectors, making them a more reliable investment option during a recession. Consider international diversification. Finally, investors should consider international diversification during a recession. Investing in international stocks can help diversify a portfolio and reduce risk. This is because international stocks are not always correlated with the U.S. stock market, meaning they can provide a hedge against market volatility. For example, during the 2008 financial crisis, emerging market stocks, such as those in China and Brazil, outperformed U.S. stocks due to their strong economic growth and less exposure to the U.S. housing market. In summary, there are several strategies investors can use during a recession to protect their portfolios and generate strong returns. These include investing in companies with a strong financial position and competitive advantage, focusing on dividend-paying stocks with a long history of increasing dividends, and diversifying internationally. Additionally, investors should consider defensive sectors, such as healthcare and consumer staples, and remember to stay disciplined and patient, even during times of market volatility. By following these strategies, investors can weather a recession and come out stronger on the other side.